What's going on, my fellow wealth creators? Matty Ice here. In this video, we're going to go through a LinkedIn post that was shared with me by a good friend of mine talking about IUL cap rates. And I found the post very, very informative. And I really appreciate the transparency with this as well. I think there needs to be a lot more of this because there is a major, major issue right now with how IULs are marketed, presented, sold, advertised, and just illustrated to people in general. It's very, very deceptive. It's very, very misleading, and people are making major financial decisions with these products without knowing how they actually work and what the risks are involved, because oftentimes they're just swept under the rug. And this particular post, we're talking about IUL cap rates, because IUL cap rates can be very, very deceptive, especially if you don't know what you're looking for. And you buy it just based on, if you buy an IUL just based on the cap rate because it looks really good right now, is that what it's going to be in 2 years, 5 years, 10 years? Probably not, as you'll see in this post. And it's just, man, it's very, very deceptive and really frustrating, because newer policies that they sell, they do the same thing where they'll show a really good cap rate, but then a couple of years into the policy, a few years into the policy, they drop the cap rates, and it's just it's kind of like a marketing expense, as one of my mentors would put it. And it can have a major impact on the long-term performance of your policy, guys. So now I'm not saying that, and the gentleman that did this post is not saying either. He specifically says this part in the post that this doesn't represent all carriers and all IULs or anything, but it's a pretty consistent trend among a large portion of these companies. And just at the end of the day, it's something you need to be aware of so that you can make a more informed decision. All right, so let's check this out. All right, so shout out to Brian Mandershade. I apologize if I mispronounced that, but I've actually seen multiple posts from Brian. Really, really good stuff. And like I said, I love the transparency in this post. So let's read it here, and then I want to go dive into this image that he shared specifically about IUL renewal rates for the cap over the last 10 years. All right, so one of my least favorite things about being on social media are the misleading posts calling index universal life insurance a risk-free investment. Couldn't agree more. That is such a ridiculous statement when someone says that this is a risk-free investment. Talking about IUL, are you kidding me? I'm not even sure how that's legal, like how that gets past compliance. So he says here, IUL is not an investment. It is absolutely not. It is a life insurance policy. The permanent life insurance policy part here, I would argue, because many IULs lapse or are set up to lapse. So there's nothing permanent about a lapsed life insurance policy. So the fact that it's able to do that, particularly because of rising cost of insurance as people get older, I don't like that. Calling it a permanent life insurance policy. However, when done correctly, can it be permanent throughout the policyholder's life? Of course, right? But I'm specifically talking about how IUL is primarily marketed and illustrated, showing all this tax-free retirement income, over-leveraging the policy, and also not designing them correctly or funding them correctly either. There's just like so many things that can go wrong. All right, potential has a cash value component with potential returns tied to an external benchmark, such as the S&P 500. They are absolutely not risk-free. 100% agreed. There are many things that can go wrong with an IUL. There is a mechanism that guarantees a 0% return in down years when the market goes down. But the underlying mortality fees and expenses can cause and will, this is me saying this, will cause the account value to go backwards in any given policy year. Absolutely. So when you hear an agent say you can never lose money in an IUL, run the other way, because it is a straight up lie. You might not lose money in the market, but you will lose money because of the market going down, because there's fees and expenses involved. All right, there are other risks that can also cause premature policy lapse, which is especially problematic if there's an outstanding loan balance or policy loan. Again, outside any overloan protection rider provisions, 100%, guys. If an IUL policy lapses, and particularly during retirement years when you're taking out all those policy loans for income that people show you all the time, that can be really, really dangerous. Third and finally, renewal rate integrity remains a problem. While there are economic factors that impact cap rates, like general portfolio yield, setting the options budget, risk-free rate, and underlying volatility impacting option pricing, some carriers are better or worse and at maintaining their promises to enforce policyholders. That is huge, guys. I want to talk about this for a second, and then we'll finish up the post and we'll look at the image. The comparison of the different IUL companies. Guys, the underlying index that the IUL is attached to, or that you're using for your crediting strategy, the performance of that index doesn't have anywhere near as much to do with the actual performance of the IUL because of the call option strategy. So there's two main things that he just pointed out here that are just crucial to understand if you are considering an index universal life policy. Guys, a lot of this of what I'm saying is exactly why I did not buy an index universal life policy. I almost did, and thank God I started learning this stuff. Okay, two main things you need to know about the call option strategy that are essential to the long-term performance of the IUL itself is the options budget, which usually comes from the general fund of the life insurance company. So there's an options budget that is generated from the general fund. Okay, it's created from the general fund, and then there is the cost of those call options, and both of those things can and will fluctuate depending on certain economic conditions. Where are interest rates? What's inflation doing? Like all this stuff that can impact the performance of the general fund and increase volatility in the markets, which increases the price of those options to purchase. So that all of those things right there can make a very, very significant, oftentimes negative impact on the performance of the IUL. And you have to be aware of that. It's not just tracking the S&P 500, because remember, you're not invested directly into the S&P 500. This is a call option strategy. So there's a budget involved and the cost of the call options, guys. You have to understand that. All right, let's finish up the post. So I love that he brings that up. That's awesome. The below study was difficult to complete as carrier. Okay, maybe it's misstated here. Not all data is easy to obtain. Products are periodically repriced, and new IUL products are often introduced to replace old products. And of course, they do that after they lower the caps on the older products. They come up with new products with higher caps, but then they repeat the process over and over again. So they'll sell the new products with the higher caps, and then 2, 3, 5 years into it, they lower the caps and renew, come up with new IUL products and do the same thing over and over again, guys. So if you're considering an IUL and you're seeing that 12% cap rate, that looks really good on paper. Is that what it's going to stay at? Probably not. And what is that going to do to your IUL long term? And then, I hear agents sometimes say, oh, we could just 1035 exchange into a new IUL. Really? Like, is that what we're going to do like every 2, 3, 5 years as cap rates go all over the place? I'll pass. You guys have fun with that. All right. And then let's see, often introduced to replace old products. This post is not to say that IUL products are neither good or bad. I agree. Even though I'm not a fan of IUL in general. Let's see, merely to point out that they are not risk-free investments, and renewal rate integrity is crucially important. This does not represent all carriers. All right, let's take a look at what these IUL cap rate renewals have done for these specific carriers, for these specific products over the last, what do we have here? I think it, yeah, okay, so he did 2014 to 2024. Some are obviously worse than others, and that's where the renewal rate integrity comes in that he's talking about. But look at this, guys. Imagine, so you buy an IUL, and 11.5% is when you bought it, and it currently sits at 9.5%. That's a 17% change, 2 points there, 2 points or 2 percentage points, right? Maybe that's not significant to you. That would be significant to me, especially if the new issue that they're selling is 12.5%. So your cap is 9.5, but new issue is 12.5. What's up with that? That's kind of messed up, dude. Some of these are actually really bad. I mean, if we go down here to, what is this, Lincoln, the Life Elements product started at 11% in 2014. It's at 5.25%. That's 52% change. North American builder IUL here. 2014 was 14% cap rate. It's just under 7. Securian, Eclipse IUL started at 13%. That means a lot of people bought the IUL, showing this 13% cap rate. Now it's at 7.5%. So, like, what the heck, guys? Especially during a pretty massive bull run over in the market over how many years? What's it been, like 15 years or something? 12, 15 years? Maybe not 15 years. I don't know. But we've been in a pretty solid bull market for a long time. And so why are these cap rates going down like this? Like, I don't get it. Well, I do get it, but it all comes down to the options budget and the options cost, among many other things. All right, but that's this is crazy to me, and one of the main reasons why I don't want anything to do with IUL. Not to mention, here's what I'll finish up with, guys, because man, that stuff is crazy. So if you're looking at an IUL, here's a good question to ask your agent. Is okay. So we're looking at this IUL. It's got a 11, 12% cap rate, whatever. All right, that looks great. But what is the cap rate for policyholders 5 years ago? Ask them that question and see what they can say. See what they can come up with, and maybe it's better. I don't know. Maybe because I know that there's there's a couple of IUL companies that don't play this cap rate game at all. So previous policyholders 3 to 5 years ago, whatever, will have the same, if not very similar cap rates to new policyholders. There's only a couple that I'm aware of that actually do that, though. And so if you're looking at any of these, it's just a good question to ask. What is the cap rate for previous policyholders? Because that's going to give you a really good indication of how the company is going to treat your IUL in the future as well. All right, so very important, guys. And I'll finish up with this. Did you know you can get upside potential downside protection in the market with a whole life product? You can absolutely do that. It is, for me, it just kind of makes IUL kind of useless, because the big promise of IUL is being able to participate in market gains without the downside risk, right? That's one of the most attractive parts of an IUL. But it has all these other problems involved, as you can see, as we've seen here. All right, but so if you're attracted to that, why not just get it in a whole life policy where you don't have all these problems? You don't have the eternal rising cost of insurance, because IUL is built on annual renewable term, guys. So your cost of insurance increases every single year exponentially when you get older. Okay, and with a whole life policy, you don't have that problem, right? We don't have to worry about managing net amount at risk and all that stuff, right? Like, to me, it just makes more sense if you're drawn to that. Like, I'm not a big fan of involving the stock market in my life insurance policies, but if that's something you want to do, why not do it in a safer way, in my opinion? Just something to think about. I will link that training down below, show you exactly how it works, because you can get that with a whole life policy, guys. All right, so anyways, I hope this helps. I hope this just brings some clarity, gives you some questions to ask your agent if you're working with one right now. And if you're looking at IUL, I just want you guys to be careful. I want you to understand how these things work. What are the things that can be changed? How is that going to impact the performance of the IUL? And does that make a difference in your decision? It did for me. So anyways, I hope you guys are crushing it, and I will talk to you in the next one. To your success, Matty Ice is out.